Good afternoon, guys. This is Tony from Trader Flow. We just have a quick update now for you regarding the market post NFP on Friday. Now, the numbers were very strong when it came to the US NFP. Then there was some weak in the ISM, and the market had a bit of a two-way action. When you look at the markets generally and non-farm payrolls, the way I like to take the movements on that day is a bit of a grain of salt. And I think importantly, we are seeing a fair bit of resiliency when it comes to the US bond market, especially today in Asia. You're seeing it start to creep higher. Now the 10-year is sort of sitting here above its little downward trend line, and if it breaks back above the high from Friday, then we're going to be into a little bit of no man's land that creates a little bit of downward pressure on stocks and upward pressure on US dollar, and a little bit of a hated move if that was to happen. Right, the market doesn't really want this to be the case. What that would entail going forward is probably a fair bit of stop hunting when it comes to, say, gold. That would mean a move back below 2,000 dollar yen, back above 146. Aussie dollar back below 66.50. This sort of move though would be actually a little bit better for the maturity of the rally. The market has had a huge move higher when it comes to stocks. Let me just bring that up now. Dow, US 30. And so for the market to pull over is nothing here, and for it to pull back a more significant amount, and the number that we're looking for earlier in the year, if we did have a pullback, would have been something like 35.7. Now, where's that come from? It's sort of the old number, and it lines up with the previous resistance. Okay, when those two sort of things happen, that's pretty compelling when it comes for targeting. And so, if the market was to continue to start falling, and so the narrative shifts from Fed cutting in March to Fed cutting in April, then you're probably going to see the market roll down, 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 down. As it starts to digest that and reprice it. Now, in the movement on Friday, we did get that pullback after the resumption of the trend, say. And a lot of people hopped onto the stock market thinking that, that dip was it. So you saw that big rally, but it failed to finish strong. And now we've seen a little bit of weakness coming through in Asia. So I'm going to take the lead from the US yields. If US yields remain high, then you are going to see the market have trouble rallying. And if the path of up is over, then the downside tests will get a little bit more aggressive, and it would provide just a medium-term opportunity for us to get back into long Aussies. So if we get to a nice move back to anything close to 66, and I'm happy to be long here. Dollar yen, anything above 146, I'm happy to be short, just on the anticipation that the data will continue to weaken, and that the US economy will slow, and then that the market will come around to supporting it one way or another. The Fed. So the danger, though, is you get caught in a little bit of a second wave here, right? So you've got to be a little bit nimble between the short-term moves that are happening and the medium-term moves. I don't have a trade open at the moment. We did take some short dollar yens on Friday. I'll be looking to re-engage those. I'm definitely not going to buy US dollar up here, okay, even though it makes a little bit of sense given what I just talked about. There's just not enough risk reward there. But if the market was to run stops on both, I'm not really looking at the pound, but I'm looking at the Aussie and dollar yen, then that would be a great little re-engagement. Bitcoin and NASDAQ, they may follow a little bit of the same sort of trend. NASDAQ's been a fast Dow at the moment, and that would be hated as well if the market was to roll over here. All right, but it is the first couple of weeks of January, so you can expect this sort of movement a fair bit of the time. And if you are looking for updates on a more daily basis, come over to the Trader Flow Discord. We'll give you an update on how we see the market unfolding, so you don't get caught in what would be absurd moves if you don't study the bonds. Cheers.